Good morning and welcome to the Australian Early Finance Briefing for Saturday, the 4th of July. Happy Independence Day to all those in the US. Today I'm going to tackle Afterpay. Afterpay Touch is its formal name. It's the stock market darling of the Australian market. In fact, it has increased about 600% since its lows, 640% since its bottom on, I think it was about the 23rd of March this year. So an absolutely phenomenal explosion in its price. It's a name that I have held in the past and done well on, but I'm sort of licking my wounds this time, having not jumped on the recent rally to my peril. So I'm going to have a look at sort of some of the background behind why it's sort of soaring so much, and the concerns that we have, particularly now at its substantial valuation. So Afterpay hit $8.90 at the end of March. This week alone, it's rallied 22% and closed at $67.50. That's right, in just over 3 months. It now has a market value of about 18 billion Australian dollars, which puts it within reach of the ASX top 20, which obviously has some technical drivers. A lot of funds will need to add it to their names just because it is in the top 20. There's been somewhat of a confluence of positive narratives, as Robert Schiller would probably describe it, that's helped drive this amazing rally in the price. So we've got the trend globally of accelerated shifts to e-commerce, something Afterpay benefits from. Most of its transactions are via e-commerce. We have, government stimulus money being handed out, people having to spend it some way. Then we've got the global expansion story. So they've just launched in store in the US and begun expansion into Canada. You've obviously, it's technology. The technology story is, a little bit of a stretch. It's not, not particularly tech heavy as a business, but it does sort of fit within that space. Then we've got, this week we had the Instagram page of Afterpay US announced that ASOS, which is a popular online clothing store, is now offering Afterpay in the US. So late in May, we had a Chinese tech company, Tencent, announcing they were buying a stake in the business, 5% stake. So we have all these positive stories. Then we've also got the local trend where the majority of Afterpay's business is still in Australia. They had the superannuation early withdrawal scheme, and Afterpay typically is most attractive to under 35s. And guess which demographic has been the most prolific uptakers of the early superannuation withdrawal? The under 35s. So some analysts are saying that this is just even more Afterpay fodder. And from the 1st of July, people can withdraw another 10 grand from their superannuation. So who knows? That could be further positive stimuli for Afterpay. We've also had its UK subsidiary ClearPay reach more than 1 million active users in Britain, and that's in just under a year. So it makes ClearPay the fastest growing BNPL, buy now pay later company in the European market. So it's not just mutual funds needing to add the name or to have it on their books. Towards the end of the financial year, that's driving the price. In the last fortnight, CommSec, the AFR has reported that it dealt with 10% of the total volume of Afterpay. CommSec is the largest sort of retail stock broking platform in Australia. So it's a little bit like our Robinhood. So that it does indicate that it's becoming a bit like a dare I say, a Bitcoin narrative. People, when they're catching up with their mates, they'll boast about how much money they've made off Afterpay recently, similar to how Bitcoin was a couple of years ago. And we've seen analysts also upgrade their targets, largely using these narratives as justification. So Citibank has upgraded from 27.10 to 64.25 in one hit. But it still maintains a neutral high risk recommendation. So it's sort of being a little bit, both sides of the story. UBS has always been or in recent months, always been the most sort of harshest critic of the company. They gave a $17 price target last year. It added a $13 price target and a sell recommendation, despite a strong third quarter result. So, what are some of the headwinds facing the company? So, the sort of the underlying fear of a lot of investors in the name was regulation. So, if you want to get a credit card in Australia, you need to be at least earning 50 grand in a steady job, have a good credit history. What do you need to access Afterpay? Not much. ID, essentially. So it does have much looser lending standards, and they're largely unregulated compared to credit cards. So there's always the risk that as these companies get bigger and bigger and bigger, particularly a top 20 company in Australia, it's going to, capture the attention of regulators and politicians. We also have, one of the largest potentially recessions we've had in a very long time, largely affecting millennials and those under 35. Its core user base is going to be most adversely affected by recession. So, it still has a very low default rate. Whether that is maintained, it's yet to be seen, but it's definitely a risk that people don't really seem to be making much of a point of at the moment. So another factor, a headwind for the business, is the fact there are so many competitors. We've got ZipPay, Klarna, you name it, and it indicates there's not. It's not, because I mentioned earlier, there's not that. It's not technically distinctive or unique. That it is really relatively easy to replicate what they do. So obviously, beyond first mover advantage and brand value and that, there's not a lot stopping other companies eroding their market share. They're still attracting about a 2% fee per transaction from merchants. So that could potentially be eroded significantly due to competition. We've also got some credit card issuers sort of trying to offer something similar. So for example, Citibank, which is I think the largest credit card provider in Australia that's not in the big four banks. It's partnered with retailer Kogan to provide instalment plans at point of sale in a model that's similar to the major buy now, pay later providers. And looking at the stock valuations, so RBC Capital Markets analyst Tim Piper points out that the enterprise value to sales multiple, which is a typical valuation metric used for these sort of rapidly growing tech companies that aren't making a profit, such as Afterpay, is 24 times, which is much higher than the median of peer US tech stocks, which trade at 16.2 times. So there is obviously a valuation mismatch. However, most of the US tech names aren't growing as rapidly as Afterpay is projected to grow. So maybe, it's not a hugely different valuation. Okay, finishing off with the market update. The US market opened about an hour ago. We're seeing a trend. Large cap names seem to be up about 45 basis points, the S&P 500. The Russell 2000 is down almost 1%, so a bit of a divergent based on size there. And that is your early finance briefing for Saturday, the 4th of July. Have a great day.